Hello, everyone. I hope you're all doing well today. It is Apex Trades here, coming at you with another market sector analysis. So last week saw a tremendous amount of turbulence and volatility. However, in the markets, it was mostly bullish. Although we had numerous instances of controversial news with the storming of the Capitol building, Democrats seizing the Senate and the entire government, there was a tremendous bullish sentiment overall. The markets respond very positively to the Democrats in office. And even when people and reporters alike were talking about the pending civil war and apocalypse raging in America, markets disregarded all of that news as simply speculation and continued higher based off these technical sentiments. So, looking at SPY today, we noted that we broke over, or we can note that we broke over that key pivot that we were watching of 378.46, and definitively. So on Thursday, we broke out, not exceptionally well, but we broke that level. And Friday, we saw a beautiful V-shaped recovery over that level. Strong continuation throughout the latter half of the day with a very prominent piece of bull volume coming in at the last 15-minute candle, showing a lot of strength going into next week. So we'll see how the markets open up tomorrow. The new key pivot high that the bulls need to break is Friday's high of 381.49, and the key pivot level that the bulls need to defend is this pivot low of 364.82. So if the bulls do decide to pull back on Monday or Tuesday, they have a tremendous amount of room to do so based off this impulse wave here. The higher low compared to that 364.82 level is the most likely outcome. If that comes through, then the most likely outcome would be a break of whatever high is set, whether that be Friday's high or a new one on Monday. But watching these two levels for reference, the dollar breaking out of this falling wedge that we have been watching for a number of weeks and months. And I talked on, I believe it was Thursday, something I learned from the chart guys was how the inverse correlation does not seem to matter in this instance. And the reason why was because there is a huge influx of volume coming into the broader markets as there is now political, what is the word I'm looking for? As the political environment is solidified. So the Democrats have the House, have the Senate, they have, I guess, the entire government. So now big institutional players can place their money where they would like without having to worry about unnecessary or premature speculation. So based off that influx of money rotating around to new sectors like TAN and XLF, the market bulls are exceptionally strong and do not care much that the dollar bulls are coming through with this beautiful technical bounce. So we'll see what happens. All it depends on is if money continues to rotate into the markets as prominently as it does, then the dollar bounce here is not as relevant, and the correlation can be in sync, and that is perfectly okay. So the pivot high that the bulls on the dollar need to break is that 91 level. That they need to defend is 89.2. So we'll look for a couple options. It might be a lower high compared to that 91 level, a higher low compared to 89, and a breakout confirming that daily trend change, or it might just be a surge early into next week, breakout of that 91 level, a higher low, or a bounce off of it, or retest and then confirmation through continuation. We'll see what happens. But these are the two levels that I'm watching. QQQ jumping in on the action, as it typically does. We noticed that little pullback on the 6th, as there was a little uncertainty about Democratic policies that might affect big tech. But nonetheless, the bulls bought the dip and continued raging higher. The new pivot high that the bulls need to break is Friday's high of 319.39, new pivot low that they need to defend. I shouldn't say the same pivot low that they need to defend is 305.18. Any pullback from here will likely be bought up based off the size of this impulse move. A higher low compared to 305.18 level is the most likely outcome, and then continuation from there would be the most likely outcome over 319.39 if we decide to pull back before breaking that high. But here are the key two levels that I am watching moving into next week. IWM So we lost the daily uptrend. Bulls disregarded that entirely. Huge day on the 6th. We can see it with the smart volume. And now, I don't know how accurate this indicator is. It was a public script that was made by one of the TradingView users. However, we see this huge amount of bull volume and hardly any selling. And we can see that represented through this huge volume node here on the 6th. So continuation is likely. Bulls have full control based on the size of this impulse move. Any pullback would likely be bought back up. Two key pivot levels that we were watching is the bull defense of 190.94 and the break of 209.77. So look for those two levels to come into play into next week. SMH, a little bit of a pullback day. However, we can see with the smart volume that a lot of buying took place. Again, this is the type of situation where I question this indicator's validity when you see this huge red candle, but all this green buying. I mean, hit or miss. Just use it as a light reference. Make myself sound a little smarter. So a little bit of a pullback makes sense. We might have a bit of a divergence play here compared to this peak to this. But SMH looks very strong breaking out of that bull pennant, and with its correlation to QQQ and the strength of this sector, I would expect continuation higher. The key pivot low that the bulls need to defend is all the way down here at 211.91. So based off the size of this impulse move, any pullback is likely to be bought back up. We might revisit that breakout area, see a bounce, and then continuation in the daily uptrend, but looking very strong overall. And the key pivot high that the bulls need to break is that Friday high of 235.91. TAN. So again, another euphoric sector that had a little profit taking on Friday. It makes sense because from the 5th until the 8th, 3 sessions of trading, we moved up some 15%. So a bit of profit taking makes the most sense. A bit of a double top here at that 123.60s level. That's a key pivot that the bulls need to break. The one that they need to defend is 90.64. But based off the size, this impulse move up, most likely outcome is a higher low and then continuation. Strength in euphoria in TAN is in full effect. We are not divergent. We're seeing higher highs. Though we are very overextended and overbought, no divergence in play. So bulls still can continue higher. We're noticing, I believe it's been 4 weeks, 3 weeks. Yeah, so 4 weeks, and 3 out of 4 weeks have been a higher low on the weekly chart. And 3 out of those 4 weeks has been a higher high and a higher low. So look for the higher low pattern to break to maybe signal weekly consolidation, but it's just a pattern I'm observing. Any pullback from the daily chart likely to form a daily higher low. XLV continuing very nicely out of this pennant pattern here. Lots of continuation, great bull volume. For targets, since we are in an all-time high situation, what I'm looking for is whole numbers in increments of 5. So 120 on deck, 125 from there, 130 after that, and so on and so forth. But looking very strong, love the volume coming through. RSI is getting a little overbought, but no worries at all. Any pullback, most likely outcome will be a higher low, retest the breakout area and continue higher. Key pivot level that the bulls need to defend is that pivot low of 111 and 11 cents. Cool little number there. And the pivot high that the bulls need to break is 117.91. XLF coming within about, 58 cents of the all-time high on the 7th. Just double check that math. No, completely off on there. Coming within 12 cents, apologies, of that all-time high. Good thing I double checked so I don't sound like a complete idiot. Based off the strength of that move and the volume that I'm noticing here, any pullback will likely be bought back up as a higher low. A lot of strength coming out of this breakout zone. And Friday's candle with a nice hammer, forming a similar pattern to SPY, a little red out of the gates, V-shape from there, lots of volume coming in at the end of the day. So notable to see that type of strength in this sector. So we'll see what happens coming into the next week, but all bulls from here. And XBI, this is the one that was coming in within 58 cents of the 48 cents of the all-time high, 58 cents. My math is deplorable. Apologies there. But what I was looking for here based on the size of this pullback was a lower high, higher low, and then a breakout into a bullish equilibrium. We almost V-shaped. I mean, like I said, coming within 58 cents, so it's quite close. A little bit of an indecision doji candle there. So any pullback, most likely outcome would be a dip buy and then continuation out. The level that the bulls need to defend is that 138.91, and the one they need to break is at 152.70. So we'll see what happens coming into Monday, but this sector is still all bulls. So thank you very much for tuning in today. I hope you enjoyed the video, and I will talk to you next week.